Welcome back to another episode of Wealthy Choices. He is Steve and I am Tyler. We are continuing our talk about the Regional Opportunities Investment Tax Credit. And today we're going to be talking about what qualifies. That's right, Steve?
That is correct. So this is the tax credit where you can get up to potentially $270,000. Crazy amount of money as a refundable tax credit from the government, which is cash in your hand.
Wow.
Right? Now, what qualifies? This tax credit is for buildings, essentially. Whether you're buying a building, renovating a building, or otherwise improving a building, that's what qualifies. So what the language that the government uses for this is anything that qualifies for a Class 1 or Class 6 asset on your tax return.
Okay, and to cut you off there, Steve, what would be some examples of Class 1 or 6? Is that what you said?
Yeah, Class 1 or Class 6. So really the main difference between Class 1 and Class 6 can be the type of foundation that the building has.
Okay.
And they have different depreciation rates. So you're able to recapture your costs on your taxes at a different rate. That's how the class system works in the Income Tax Act. So buildings that would qualify could be self-storage units could qualify.
Right, okay.
Right? Retail space could qualify.
Car dealerships?
Car dealerships. Okay. The building of the car dealership. So not the asphalt.
Okay.
Right? That's not the fencing potentially.
Right, yeah.
But the building itself would qualify. Something, say, like a car wash could qualify.
Okay.
An industrial space. A farm building. Right?
Okay.
Whether it's a chicken barn or a pig barn, those could qualify. So this is a pretty big tax credit that covers a lot of infrastructure.
Seems like it, yeah.
Yeah, absolutely. Big thing is that the building eligible properties have to be commercial or industrial. So residential,
not going to cut it.
Doesn't count.
Okay.
No matter what the form is of residential. So if it doesn't matter whether it's a high-rise building or a set of townhouses.
If I own an apartment building, that's not going to count.
That doesn't count.
Right.
No,
okay.
No. Even though it's multiple unit residential, it doesn't qualify because it's not considered commercial. One thing that's specifically not in here is if you've got a mixed-use building where it's commercial downstairs and residential upstairs, like a lot of downtowns have that.
Sure, yeah.
I suspect that they won't qualify. There isn't anything in the legislation that we could find that specifically talked about that. It doesn't mean that it's not there.
Right.
We didn't see it. So I would suspect that a building like that does have the potential of not qualifying. Okay. Certainly if it did, it would be on a prorated basis. Which is why it would be hard, because how do you decide, what is qualifying and what isn't?
Sure. Yeah.
Under a purchase. Now, if you've got a commercial building that has residential upstairs or a residential portion to it, you would have to find this. It has to be zoned as commercial for your local municipality. Is going to have to show that it's zoned commercial.
Right.
It is possible that renovations to that commercial space could qualify.
Oh. Okay.
So while the purchase might not, if you're renovating a commercial space that is designated commercial by your municipality, it should pass the test.
Interesting.
So, like everything in taxes, it can get pretty complicated. And when in doubt, you want to reach out to your advisors.
Or the team at the tax force.
The team at the tax force is here for our clients to walk you through some of these tougher questions.
Awesome.
It also, we talked about this yesterday, it has to be in a designated region. It can't just be anywhere.
Yes.
Right?
Yes.
Property, whether it's purchased or renovated, does definitely have to be in the designated regions.
Cut to picture of the map.
Cut to the picture of the map.
or swiping through.
There's a long list. Funny too.
There's a long list. So
that's right. Yeah, there's a long list of everything. Hi, Maple.
Instead of reading it out, we will just show you.
Yeah.
Hey everybody, thanks for watching, and stay tuned tomorrow for the final part of this 4-part series.
Strong.